Hello, everyone, and welcome back to another episode of Majlis and Markets. As always, I'm your host, Hassan Jivraj. Really happy to be doing another episode. I think we're at episode 70, which is a big milestone for this podcast. And remember, this podcast will also be available on audio platforms as well shortly after. And also, please, before we begin this episode, remember to like, share, and subscribe, and also sign up to all of our social media channels as well at Majlis and Markets. But now I'd like to introduce my guest for today's episode, Robert Mogielnicki. Robert, welcome to the podcast.
Yeah, thank you very much for having me here. It's nice to be on this 70th episode. It's better than celebrating a 70th birthday.
So it's really great to chat to you, Robert. You know, I've been communicating with you for the past few years for articles I've been writing for different publications. Whenever I need any feedback or any kind of color on the Gulf and the Gulf political economy. And of course, you have your own story, and you're very well known in the political economy sphere of the Arab Gulf states and indeed across the Middle East. So, Robert, as an icebreaker, tell me your story. Who is Robert?
Beyond having a complicated Polish last name, thanks again for having me. I'm at the moment joining from the Arab Gulf States Institute, actually our new offices here in Washington, D.C. I'm one of the senior resident scholars here at the Institute and oversee the political economy research. I also am an adjunct assistant professor at Georgetown University. I've been there teaching an original course on China, Middle East, and North Africa relations for a few years now, about 4 or 5 years. And I also do a fair bit of advisory work for governments and private sector firms through the Institute and beyond. And I like to think that I do a good job kind of helping what governments and private sector firms understand the economic implications of foreign policy decisions. And I think there's a lot of work to do in that space these days.
Amazing. And Robert, before we get into the intricacies of political economy of the Gulf countries and your thoughts on China, US and Chinese involvement in this region, tell us, how did you get interested in this region?
Yeah, well, actually, it's a bit of a funny story. I initially applied to Georgetown University as a teenager, looking at where I wanted to do my BA. As a scheme to get in, I applied as an Arabic major. And I say a scheme because I thought I would have a better chance saying I wanted to study Arabic at Georgetown University than basically going in as an undecided major. And that kicked off a undergraduate degree that was focused on Arabic, Middle Eastern studies, and government. After my degree, I spent a few years living in North Africa, mostly in Egypt, from 2010 to 2013, roughly. Spent some time during that period also in Tunisia. And then I made my way over to the UK and did my graduate work, an MPhil at St. Antony's College in Oxford, and then enjoyed my time so much in the UK and Oxford that I decided to stick around a bit longer, and I did a DPhil at Magdalen College, also in Oxford. While I was there, I was working for a research advisory and consulting firm that helped me pay my way through my graduate work, but also was doing a lot of work in the Gulf. And I came initially to Oxford as a North Africa guy. I'd been there before 2011 and after 2011, saw a lot of exciting political and economic developments in the region. But when I started working out of the UK, in addition to my graduate work, I was being sent out to another part of the Middle East, to Saudi Arabia, to the UAE, to Qatar. And really that marked the beginning of a pivot in both my academic interests and my professional trajectory from more of a North Africa focus to a Gulf focus. And that was a great time to make that pivot. We're talking around 2013, and a lot of interesting things started happening in the Gulf region, starting with the oil price crash and the ensuing period of austerity in about 2014, and then new political players coming to the scene, especially in Saudi Arabia with Mohammed bin Salman and announcing the really, I think, important and transformational social and economic agenda that we now know of as Vision 2030, and a host of other important regional developments. And all of that happened just quite organically, a lot of it by chance, and it's been a fun ride.
Amazing. And Robert, before we get into the Arab Gulf States Institute, where you're at now, and what your thoughts are, what was it like spending time in Egypt? Because you said you were there in 2010, so I'm assuming this was before the Arab uprisings began.
Yeah. Well, I had the benefit of being in Egypt at different stages of my life. I first visited Egypt as a study abroad. So I was a student at the American University in Cairo. So that was one distinct experience, which I suspect many listeners here would be able to share. A lot of folks who are coming from the U.S. who got interested in the Middle East. Many of them make their way one way or the other through the American University in Cairo. But yes, that was before 2011, the big political upheaval in Cairo. I made my way back after that, the protests and the ousting of Hosni Mubarak in the summer of 2011. And it was also a very exciting time. And there was a lot going on, a lot of changes. The military rule was in place, but I saw that transformation of the political opening where we saw a blossoming of media organizations and newspapers, some of which I worked with and did some work in journalism and reporting, and all the way through to parliamentary elections where we saw the kind of rise of the Muslim Brotherhood and then a Muslim Brotherhood president, and then really the downfall of the Muslim Brotherhood as well. I saw most of that unfold and really I left in October or so, the fall of 2013, to start my graduate work. So it was quite an eventful period in Egypt to be there.
Indeed. And Robert, you said what did you do after the PhD? You said you worked for a consultancy and then you went to the Arab Gulf States Institute?
Yeah, it was kind of a very lucky and seamless transition. I spent several years while I was in the UK working for this consulting firm, Oxford Strategic Consulting, and then wound down that work as I was finishing my PhD and wrapped up my PhD and came to the US. And shortly thereafter, a position opened up here at the Institute for a resident scholar working on political economy. Quite lucky in the sense that I had just completed a DPhil or PhD, for those of you more familiar with the American system, on political economy of the GCC. I spent a lot of time looking at special economic zones and free zones in the GCC and was quite interested in turning that dissertation into a book, which I did in 2021. So there was a really obvious and natural fit with the needs of the Institute and my background. And in the meantime, I had actually been working with the Institute, publishing pieces with them and other forms of engagement. So I was a familiar face. They were a familiar outfit, and I think it was a good match. And I've been here for the last few years.
Amazing. So Robert, run us through what does a typical day look like for a scholar at an institute like this?
No day is exactly the same. There's a lot of variation, and that keeps things interesting. I mean, on any given day, I'll be working on some shorter analytical products. So big part of my job is to publish periodically on important issues pertaining to the political economy of the Middle East. That could be on trade, investment, energy, regulations. And I tend to focus on all of the countries in the GCC. Although that said, we get significant demand from the big economies in the region. So there's a lot of interest in Saudi Arabia, in the UAE, and Qatar. Although I like to keep tabs on the other countries as well. So I'll publish short articles on a regular basis. I'll work on longer reports, book chapters, and even books. So I just published a edited volume with the help of several contributors on sovereign wealth funds in the Middle East and Asia. So that was a long-running project that had been in the background for some time. And those of us who work in media and publishing know books can take a long time to see the light of day. So it's really nice when they're finally out and available for public consumption. I have a lot of conversations throughout the day because the great part of my job is realizing that there are limits to my individual knowledge, and I need to go out and meet a bunch of folks and cultivate a deep and expansive network of people who understand various countries and issues even better than I do. And I think that's the approach that I take to expanding my knowledge. It's not thinking I have to know everything at any particular point in time, but knowing who the right person to call for a particular issue and to help me, work my way through developments as they're happening. And the pace of developments in the region these days, if we just focus on the Gulf, for example, I mean, it's really tremendous. So you need to keep on top of all of these events, but you also need to have a nice deep network to utilize.
Amazing. Yeah, I was just going to say on the sovereign wealth funds, we did a nice episode with Diego Lopez from Global SWF a few episodes ago, and that was a really nice. And we did an episode with him earlier in the series, breaking down sovereign wealth funds. And I know you've done a lot of work in that, in addition to the upcoming work you've done. But Robert, for people who are not too well informed about political economy from a political science or political economy perspective, why is political economy an important thing to understand and to know about before looking at economies?
Well, sure. I mean, because you can't separate the politics and the economics in the region. And that's something that was obvious to me when I undertook work in the Middle East, but it's become even clearer and clearer as I go about this research and continue to learn more and different things about the region. You have to understand what the economic drivers of political decisions are. And then you also need to know what the political drivers, of economic decisions are. And, when we think about the ways in which certain outcomes happen, whether they're political outcomes or economic outcomes, it's really impossible to separate out, purely economic developments and purely political developments. And, my institute, I think, did a very good job right from the get-go in ensuring that we had somebody who covered political economy. A critical way of looking at it is, I like to say, they got, killed two birds with one stone. They have someone who can cover the politics and the economics, and they only have to pay one salary. But I think, it's not so much about that. It's this very, acute understanding that there is a close relationship between political interests and economic interests in the Middle East region. It's very difficult, if not impossible, to separate the two. And actually, to have impactful analysis, you need to be able to give both subjects adequate attention.
So, Robert, a lot of it, when I talk to investors and people who look at this region, they look purely at the financials. But I always say to them, if you want to really understand the economies of this region, and if you want to make good investments in this region, you have to understand the politics. And like I said, different countries have their own idiosyncratic stories. And with the Gulf countries being so personalized in terms of the politics, how important is it to know about the different political dynamics within these countries?
It's absolutely critical, and Saudi Arabia is a perfect case study of this. Yes, there were economic needs that are driving and underpin the big changes that we've seen in the country under Mohammed bin Salman and Vision 2030 and some of the large giga projects and other development initiatives. But economics alone do not help you understand the full picture of what's happening in Saudi Arabia. And I would go even further to say, without the particular individual and personality of Mohammed bin Salman, we would be looking at and talking about a very different Saudi Arabia. So one, in terms of broad development trajectories and the trade-offs that different political decision makers make in economic development, that is, at its core, very political. It's not driven just by economic imperatives. And also, when we start to think about some of the regulations in these countries or some of the drivers of investment decisions, yes, I think in many cases there is a strong economic impetus and a strong economic objective. And we could all say that it's in these countries' interest to be very consistent and coherent with regulations. But at the same time, because of the structure of the political systems in these countries, in many cases, the line is very fuzzy between politics and economics. And there's not always the same type of institutional safeguards necessarily that would require certain economic outcomes from reoccurring. I mean, if a political leader in one of these countries wants to make a change or wants to intervene into a particular area of the economy, aren't the same institutional barriers or constraints that a leader in other countries may face. And you really, as an investor or a multinational operating in the region, you need to be aware of these political dimensions. And we're starting to actually see some asset managers, some VCs, although I will say a very small amount of them, having a policy vertical function within their funds or within their firms. I think, again, that it's not common. A lot of these teams tend to be very small and very lean. But I do think that there's a growing recognition that having a policy vertical, thinking about the ways in which policymaking happens and the implications that would have, that need is starting to trickle down into a lot of investors' calculations and mindsets, and I expect it to continue.
Robert, since 2015, 2016, as you mentioned before in the introduction of yourself, you mentioned about the rise of figures like Mohammed bin Salman, and you can talk about Mohammed bin Zayed in the UAE, and you can talk about the new Sultan in Oman, who came in the last 5 years. There's been this drive across all the Gulf countries that they want to diversify their economies. Obviously, we can talk about the oil price crash and some of the other regional changes taking place. But if I cast my mind back to the attempts of making the Gulf Monetary Union in the early 2000s, and then it failed in 2010 or 2009-10 when they couldn't agree with hosting the central bank, among other issues, how important is economic diversification in this generation of to the Gulf leaders of this generation?
It's important, but there's still a long way to go. Bloomberg's come out with some good reporting of late, talking about just about oil dependency and how oil dependency is not a thing of the past, even though there has been a lot of work and a lot of good efforts across the region to try for the government to try to catalyze new industries in the non-oil economy, to develop and support new initiatives, to grow nascent industries and sectors that are not directly related to the oil and gas space. All of that is well and good. And there's been a significant degree of, I'd say, progress on a surface level there. But that hasn't necessarily trickled down into the hard economic indicators that would give a lot of us who are watching the region confidence that tremendous progress has been made in actual economic diversification. And that's why I say we're at the beginning of a long road. And you're right. I mean, I won't go as far back as you did, but maybe just to take it back to the oil price crash of 2014 and the ensuing era of austerity, we saw the government undertaking a lot of measures that, were within their policy level lever toolkit. So streamlining, trying to streamline government efficiency, fiscal consolidation, reforming subsidies, doing what they could to essentially cut down on waste and make it through this period, put their government finances on a more sustainable track. Once we came out of that period of austerity, not too soon after, there was another big, from COVID-19. So all of a sudden we saw another major crisis, and during COVID-19, there was this twin crisis of also an oil price plunge and all of the various acute economic crises caused by COVID-19. And I think once the Gulf states, like the rest of the world, emerged from COVID-19, they kind of saw a new horizon in front of them. And that's really why I think it was, I would go so far as to say it kind of marked an inflection point in the region, because at that point, we started to see a number of important developments happen. To my mind, the first was that these countries decided, and you won't find this written down, there's not an explicit agreement, but I think there's a consensus in the region that foreign policy ultimately had to be good for business. So what you saw was a number of states starting to resolve these lingering disputes and conflicts that they had in the region between each other and with other countries. The Saudis did that with the Qataris and with a number of other countries, and essentially regional temperature, unnecessary increases in regional temperature were brought down a notch or two. And then on top of that, we started to see a significant acceleration in the ambitions attached to some of the development agendas in these countries. Right now, everybody talks about Saudi Arabia and the UAE and increasingly Qatar, although I wouldn't put the Qataris yet in the same bucket as the Saudis and the Emiratis when it comes to high and emerging technologies. But we're talking about the Saudis and the Emiratis as being big players in the AI game. We can't forget that this is relatively new. If you were to go back pre-COVID, I would challenge people to point out to me those of us who are watching the region and others who planted a flag in the ground and said that these countries are going to be huge players in the AI space. It really wasn't happening. Yes, there was some movement, and especially in the UAE, to try to be the first movers in the regional tech space. But if we go back a few years ago, a lot of what we were hearing from the region was, digitization of government services, raising the level of non-cash transactions. I mean, pretty practical tech applications, but not extremely ambitious. Once we came out of COVID, 2021, 2022, all of a sudden, some of those initiatives, especially on the technology front and the digital economy front, really got pushed into overdrive. And I think have catapulted a number of these regional states into a different category of global relevance. And that, of course, is very much in line with where many of these governments see themselves as influential rising powers in an increasingly multipolar world. So they've been able to subsume a lot of this work that they're doing now, these very ambitious technology agendas, into the broader economic diversification narrative. And I think, that's fair on one level. But like I said, we're still not seeing the evidence in the figures yet that government revenues are increasingly less dependent upon oil and gas. The majority of government revenues across the region still depend on the oil and gas sector. And large chunks of the GDP in these countries are still directly and indirectly dependent upon the oil and gas sector. So lots of room to go, but reasons to be optimistic.
Do you think some countries are doing a better job than others? I know that's a bit of a difficult question, but do you think some countries are doing a better job? Because if I look at, for example, at the UAE, they've done a really good job in diversifying their economy, especially if you look at countries, Emirates like Dubai. I know each emirate has their own story, but like Dubai, it's completely diversified its economy, with Jebel Ali zone and, the transport, logistics, finance. So do you think different countries are at different stages?
Well, absolutely. Different countries are at different stages. And the answer to your question about which countries are doing a good job depends on how you measure success. The UAE is a great example. Yes, the UAE, if you were to look at it in a macroeconomic sense, looks relatively diversified. But if you were to break up the UAE into its different federal components, Abu Dhabi is still not a highly diversified segment of the country. Yes, they're doing a lot these days in tech, as I said, in AI and just the broader tech spectrum, not just AI, but cloud computing, telecommunications. There's a lot going on beyond just AI. I think more practical applications of technology. And increasingly in finance. Anybody who you mentioned at the beginning of our call, I think it was your article about the capital of capital, and that's when we touched base recently. This is just a real hot spot for asset managers and for investors. And just every time I look at the figures, I'm more and more convinced that Abu Dhabi is doing all of the right things to attract more. Yes, they're making progress there, but by and large, what is still moving the needle in Abu Dhabi is its massive reserves of hydrocarbon and the commodities that they're able to export therein. The other parts of the UAE, like Dubai, really exhausted a lot of the resources much earlier on and have had to move into other spaces. So you could say they made success there, or they were just really forced to do so. It doesn't demean the success that they've had in the logistics space, for example, Jebel Ali and in a number of other different sectors. But I think that they have a very particular situation where different federal entities have started off at different spaces and have been more compelled to move forward because of a lack of resources. There are also big differences in the sizes of these countries. And you'll know this well, but not and many who have visited the region will understand this, but some of your listeners it may not be as obvious that you've got some countries, as Saudi Arabia, massive economy. It accounts for about a half of the nominal GDP of the entire GCC, 33 or so million people, the majority of whom are Saudi citizens. That's a big difference from some of the other countries where you're talking single digits, millions of people in the population, and expatriates or foreigners constitute the majority of citizens. There's huge demographic variation in these countries, and that does change. It does alter the stakes for governments as they think about economic reform trade-offs, where and how to invest their financial resources. It makes a big difference if you've got tens of millions of Saudi citizens, if you're sitting in Riyadh, and hundreds of thousands of Qatari citizens if you're sitting in Doha.
One thing that's interesting, Robert, from an anecdotal experience is that the debt levels in these countries, or the capital levels in these countries, has just increased a lot over the past decade. Like I remember back in 2013 when I was writing about capital markets in this region, you'd have very few deals. And then I think it was in 2016 or 17, Saudi Arabia tapped the bond market for the first time in the international bond market. I know they'd issued bonds before, earlier in the 90s, but how important is international capital to these diversification efforts?
It's important. It's more important for some countries than others. So, Saudi Arabia has been making a big splash with bond issuances. I think for a while, many observers said that these are opportunistic issuances, and I think to some degree that's true. Saudi Arabia, if you're looking at government debt, it's still in a really healthy position. But increasingly, we're starting to see indications that various government-related entities and other firms are looking to tap capital markets because they are in a position where, not just opportunistically and not just as a way to kind of build the kind of capital markets ecosystem in the country, but actually because they quite want access to those resources, and they might be looking ahead at an environment where directed government support and attaining those resources from other sovereign pools may be more restricted in the future. So I think you are starting to see some instances where tapping capital markets is not just done from an opportunistic point of view. There are other countries that fall into that domain as well. I mean, Oman is a good example. This is a country that actually a few years ago had much higher levels of government debt. When Sultan Haytham came to power in 2020, the country's economy was in rough shape. There was a lot of concern about the sustainability of government finances, about the sustainability of government debt levels, and also the government-related entities' debt as well. And I've got to say that as somebody who tracks Oman's economic reforms and the government's fiscal policy quite closely, the Omani government has done a really, really good job over the past couple of years making consistent, steady progress on their fiscal balance program, on reducing government debt, and also reforming their government-related entities. A lot of that has to do with the change in political institution and having a new and younger sultan who could take the reins and make some tough choices. The government has also empowered certain entities like the Oman Investment Authority, the country's sovereign wealth fund, to play a multifaceted role. So not just, they've tapped the sovereign wealth fund to play a pretty important domestic role. So a strategic role within the domestic economy and also helping to oversee government reforms. And it looks, by and large, that a lot of these, investments are paying off. Rating agencies have raised their ratings for the country and investment grade up to a kind of lowest investment grade. And and this helps. This really does help Oman looking forward, in terms of its positioning in debt markets and its ability to access capital going forward. I think if we were to rewind a few years ago, without the steady reform progress that the Omanis have made, they would potentially could be in a very different boat right now and not an enviable one. So, this is a country which I think has made progress and is also, is very interested in maintaining access to capital markets. Some of the other countries in the UAE, Qatar, Kuwait, really we're still talking about opportunistic issuances by and large. This country is useful for them to continue to issue debt, whether it's on the sovereign side or different firms, whether they're government-related entities or otherwise. But Kuwait lived for a long time without a debt law, so the government was actually constrained from issuing debt. And recently, the emir kind of pushed through a debt law, so now the government can go ahead and issue bonds. But for a long time, they were prevented from doing so, and didn't really make a huge difference one way or the other in Kuwaiti finances.
Yeah, no, I've got an anecdotal experience. When I was a reporter at the Newswire, I remember going to Kuwait in 2017, and I was there I can't remember what the building's called, but it's one of the few buildings that didn't get destroyed during the occupation of Iraq's occupation of Kuwait in the 90s. Okay. And there was a delegation from the IMF applauding the Kuwaiti government on the bond issuance. The market loved the bond issuance. I think it was an $8 billion issuance at the time, 5 and a 10-year note. I think it's expired, matured now. But what was interesting was watching after the presentation. A lot of the Kuwaiti business families didn't like the bond issuance, and there were some citizens of Kuwait there. And it kind of got me my first insight into see how much politics on the ground plays in a place like Kuwait, because a lot of people were saying that, okay, we're issuing bonds, but we're one of the wealthiest countries in the world, yet we still have a lot of political issues like corruption. And I'm sure people who know about Kuwait's political system, there's always a changeover of government very quickly in terms of the cabinet. So politics does play a big role in some of these societies.
It does. And Kuwait is a great example too, because you actually have a parliament that doesn't necessarily, the parliament's main role is one of calling out particular officials. So you do have Kuwaiti MPs who can cause a big stir and make public particular issues that they would like the broader public to know about. And I think even though this is not a formal constraint on the government's ability to make decisions, to push through new laws, that can be done by Emiri decree. It still is a force to be reckoned with. It's a political force to be reckoned with within Kuwait, and we see it impacting. It definitely impacted the discussions around a debt law for some time. It also impacts to some degree the way in which the KIA, the Kuwait Investment Authority, operates. I think for a long time, the KIA and up until this day, it's taken a very consistent and conservative approach to investing, hasn't made major changes in the way in which the country has, the sovereign wealth fund has invested its sovereign wealth. And the Kuwaiti parliament, which, by the way, is dissolved at the moment, but I think it will come back. It'll come back into the scene at some point in the future. They aren't directly involved in investment decision making within the Kuwait Investment Authority, but I do believe that officials from the fund need to present some of their earnings reports or financial reports to the parliament when it's actually in session, and that does provide somewhat of a check on the forces, or at least on the power of sovereign wealth fund officials, and at the very least, a big incentive to not rock the boat and do things differently. And though many people who have followed Kuwait are constantly surprised that how, no matter how much things change, many things tend to stay the same in Kuwait. There are some indications that we're hearing about maybe some changes on the horizon in Kuwait, and there has been talk for some time about a new investment vehicle that the government apparently is undertaking a feasibility study for, that would be more domestic oriented. It may be a fund of funds within the sovereign wealth fund, or a different investment vehicle, but it would have a domestic investment mandate, and that would be largely in line with what we're seeing from some of the other funds in the region. I mean, more of a development fund, so to speak, that would be focused on the domestic economy. Hasn't happened yet, but we continue to hear indications that might move forward. There was also a official visit to Saudi Arabia, a meeting, I believe, in Neom, Kuwaiti officials and Crown Prince Mohammed bin Salman. Some reports came out thereafter that Kuwait, may be willing to make more of an investment splash within the region and potentially invest more sovereign wealth in Saudi Arabia and in some of the giga projects. I'm not so ready to buy into that narrative yet. I've heard that before and actually haven't not seen that come to fruition. But if you add up all of these different indicators and news reports, there seems to be some growing momentum for potential changes in Kuwait. And we may see some new entities enter the fore that could shake up things in Kuwait or potentially make a bigger splash in the region.
Yeah, no, I think I heard about that a couple of years ago. They were talking about a fund for domestic activities. Robert, one thing that's interesting, people who know Kuwait, is that before the invasion, Iraq invaded Kuwait, Kuwait was actually well ahead of a lot of the other neighbors in terms of financial development and all these other things. I mean, there's a series on Netflix, I can't remember what it's called, but they talked about the Kuwait Stock Exchange being one of the most interconnected at the time in the 80s. To the international stock market. But why in Kuwait has it been like this, like since the invasion of Iraq, in terms of like there's not much political, economic changes in that sense?
Well, there are a lot of different theories out there, but many focus on the consequence of the invasion and the trauma that left, and it's kind of forced a certain type of approach to policymaking, towards savings, towards investments. And so there's a lot of emphasis on the trauma, so to speak, and the aftermath of the invasion as an explanation for the ways in which Kuwait's economy developed or didn't develop. And I think that's largely compelling. Hey, look, you haven't had the same generational shift in Kuwait in terms of leadership that we do see in other parts of the region. You still have a leadership that is much older, much more traditional in its outlook, both I think in the way that leadership sees their own country, but also sees the region and the world. And that's probably also been somewhat of a constraint to make new and I think experimental changes that we are seeing in other countries. Saudi Arabia made that change with Mohammed bin Salman and moved ahead charting a very different trajectory for the country than the country had prior to the rise of Mohammed bin Salman. Say what you want about the degree that he's moved that country in, but I think it's very fair to say that he's moved that country in a very different direction than most people have understood Saudi Arabia to be. And the same thing, again, we talked about the political leadership in different generation in the UAE and Qatar. I think that goes a long way too. And it gets us back to the importance of personalities and personal politics in the region.
Robert, one thing I wanted to ask you that's quite interesting, that I wrote an article maybe about 2 or 3 years ago for a publication talking about the UAE making a lot of these bilateral trade agreements with different countries. And, for someone like me who studied the Gulf back in the early 2010s, there was a lot of this emphasis on cooperation between the Gulf countries in the sense that, you'd have the common market, albeit with its flaws. But it seems now that a lot of these Gulf countries are doing their own thing. Would you say that the Gulf cooperation as an entity is kind of obsolete now?
I wouldn't say that it's obsolete, but I do think that cooperation at the level of the GCC is secondary in importance to the pursuit of national interests in many of these GCC countries. So the GCC still serves a purpose. I mean, you've got continued dialogue, cooperation, certainly on a security level, in some degrees, economic integration, although that has been a slow and uneven process. But in the movement of individuals, Gulf citizens across the region, the ability to open up firms, even cooperation on taxes, like value-added taxes that came online in the past few years, all of that, is important. A lot of that cooperation is being done on a GCC level. And I mean, it's important to have that body there for those reasons. But of course, the national interests play a higher priority for many of these countries. And I think you're right to point out CEPAs, these comprehensive economic partnership agreements, and these stand in sharp contrast to a free trade agreement, say, that would be negotiated amongst the GCC. And my sense is that the Emiratis decided in creating CEPAs that they wanted to have an economic policy tool that was easier for them to control. It was a very attractive option to go about and identify global partnerships where they thought that these are important partnerships and we see a lot more potential in them. And to be able to go about relatively unencumbered and unconstrained in reworking and shaping economic partnerships for what I think is really is a new era for these countries. These countries feel that they're in a new period, and they have there's a lot of room to grow global partnerships. And the Emiratis have moved about very aggressively in that direction. It's made it a little unclear how, useful a GCC level free trade agreement is, given the fact that these tend to take a long time to complete. The FTA with China has been ongoing for over 20 years. It's kind of funny that you'll hear Chinese officials referring to that length of time in a positive sense, saying this has been, a long time to get to know each other and to work on this issue. And I think there's another way to look at it. It says if you're working on a negotiation for 20 years, there's probably some big problems that you haven't hammered out. The Emiratis were not content with that timeline, and they've moved in another direction. But I wouldn't go so far as to say that the GCC is obsolete.
Yeah, no, it's interesting because I think Bahrain and Oman have a free trade agreement with the US. Those go back to the early 2000s, but also it seems like some Gulf countries are negotiating their own free trade agreements with other countries in spite or despite the fact that they're still members of this cooperation or bloc, if you want to call it.
They do. So you're right. Both Oman and Bahrain do have free trade agreements with the US. The status of those free trade agreements is a little uncertain given the tariff policies of the second Trump administration. The effective tariff rates between the U.S. and Bahrain and Oman should be zero with that free trade agreement. And of course, that's not the case with the new granted, GCC countries largely have not received the same kind of tariff wrath, if we want to call it that, as many other countries across the world. And I think given relatively low levels of bilateral trade between GCC countries and the U.S., all of the governments of the region have decided that this is not a domain that they want to pick a fight with the Trump administration over. But that being said, I mean, free trade agreements for Bahrain and Oman with the U.S., I mean, that was quite an accomplishment for these smaller countries. They're not the wealthiest countries of the region. And, they have more limited means than, say, a UAE or a Saudi Arabia for attracting foreign direct investment and other industries and international investors to their countries. And I think having that FTA with the U.S. was, a serious incentive, and it was something to tout. Now there's a little bit of an uncertainty as to where those FTAs actually stand. I think that these governments are playing it safe, and they're going to maintain their side of the agreement and hope at some point the dust will settle and they'll return back to some sort of free trade agreement that they've had. But you raise a good point. Looking forward, it's unclear what exactly will happen with free trade agreements moving forward if the new norm in kind of global trade policy that's being driven from Washington is one of with tariffs, increasing tariffs that come on, come off again. that really disincentivizes these countries from coming together, doing the hard work over the course of many years to put together, a GCC-wide free trade agreement for a trading partnership that could change.
Just if we look at the geoeconomics for a second, Robert, like one thing that just came to my mind is when I was at the Abu Dhabi Finance Week conference in Abu Dhabi last year in December, I was in a session with the Chinese ambassador to the UAE, and he was talking a lot about, GCC Chinese relationship developing. And it seems to me still that despite the UAE being a member of BRICS, Saudi Arabia, it's kind of in, it's kind of out of BRICS.
On the
They've done some de-dollarization. Some other countries are expressing interest in joining BRICS or the New Development Bank and signing new deals with China. Based on what happened between Israel and Iran and some of the other antics that have been happening in the region, it seems to me that they're still very much aligned with the US. Would you say that's true, or do you think that it's a more mixed picture?
Yeah, these Gulf governments are right now putting their chips behind the US. And I think that has been exceedingly clear since the election of Donald Trump, and especially since he assumed the presidency. I think the calculation across Gulf capitals is we are going to do what we can to ensure that we maintain strong working relations with the second Trump administration. And that has been the focus for these governments. I mean, you have officials visiting the White House talking about giving massive investment pledges. That's kind of music to the ears of the Trump administration. And these governments made a very, I think, clear calculation that what is to gain from good working relations with the U.S. is far better than kind of short-term gains that they can make by initiating and announcing, big investment deals with the Chinese companies. So it's been quiet on that front for the past a few months. I mean, I've followed kind of China Gulf relations, China MENA relations for many years very closely. I've got to say, it's been a quiet time. It's not because there's not a lot going on in terms of economic engagement between Gulf countries and China. There absolutely is in terms of energy trade, in terms of logistics, re-exports. And honestly, too, there's a lot of Chinese tech companies working in the region, but just not at that upper echelon, that sensitive area of the tech domain, AI, chips. That's an area that I think for the moment is largely off limits for Chinese companies in the Gulf, because Gulf governments have made the calculation that that's just not worth the risk. But there's still a large space in the broader economy with, in the government sector and in the private sector for, practical applications of different technologies. And we are seeing Chinese firms fill that space, whether it's cloud computing, telecommunications, cybersecurity. If you dig, it may not be loud, but you can see plenty of evidence of that.
But even on a diplomatic level, right? I mean, China brokered the truce, I want to call it a truce, between Iran and Saudi Arabia and the other Gulf countries, right? They're still quite powerful as well.
Yeah, you're right. But that was a couple of years back now. So that was before Donald Trump was elected. When it happened, it was largely regarded as a big notch in the diplomatic belt for the Chinese in the region. And I think that rapprochement between Saudi Arabia and Iran could not have happened in Washington. That was something that Beijing was able to, to help push across the finish line. That being said, if we were to fast forward from that period, a lot has happened in the region over the last 2 years. A lot of unexpected developments that have happened in the region. And I think it's safe to say that the Chinese, Beijing in particular, and also a lot of the business community, has been caught relatively off guard by the developments in the region. I mean, Beijing doesn't like insecurity. They don't like conflict in the region. And Chinese business, by the way, they don't either. And we've had a lot of conflict. We've had a lot of political tumult, if you want to describe it in that way, changes in political systems and the players who are in leadership roles. And I do think that this has presented somewhat of a conundrum for Chinese, and if we want to speak of Beijing's Middle East strategy. There's been some good scholarship out there, even by Chinese scholars, trying to make sense of what Beijing's strategy in the Middle East is. And good surveys of foreign policy elites, and from what I've been able to read, there's not a kind of clear consensus at the moment. And it's hard to my mind right now to see beyond just the economic engagement, which is going to continue to happen. It's hard to see what that kind of strategy, Beijing strategy for non-economic engagement in the Middle East is. I think that that's something that is currently has to be worked out. And it's not going to be easy for the Chinese.
And also, that's also their own domestic economic situation is not too great as well, right? So that must be playing a role in all of this as well.
Well, yeah, the domestic is going to be the first priority for Beijing, that kind of security of the party, the cohesiveness and security of the party, and also the stability of China. The kind of national interests are first and foremost. And yes, those of us who focus on the Middle East, China looms large, the U.S. looms large. So it's easy to think, that the Middle East is front and center of Beijing's, worldview on a day to day. But I think the reality is not that's not quite the case. That the Middle East serves an important role, but it's probably a secondary or a third order of importance for Beijing. So we are seeing some interesting engagement between China and the Gulf, China and the broader Middle East region. But at the same time, there's lots of reasons to expect a kind of ceiling of engagement, especially under under the current Trump administration, which is still proving to be pretty tough on China and has bipartisan support to be tough on China, and a willingness for Gulf states to keep working with Trump, to keep investment deals flowing, technology cooperation flowing, and not risk that unnecessarily with more sensitive types of collaborations and partnerships with Chinese companies and other entities.
Yeah, there was an interesting article I was reading about. I think the UAE was part of some Chinese payment system, was testing it out, and obviously the UAE likes to play, or not likes to play, but likes to be part of both initiatives. I guess still being with SWIFT, but also trying out the Chinese version and part of its diversification play there. But Robert, one other thing that I wanted to ask you about this is there's a bit of a wild card here is Russia. Mohammed bin Zayed, he was in Russia, I think a few days ago. There's talks of Donald Trump and Vladimir Putin meeting in Alaska, even though he said it would be in Russia recently. How important is Russia to the Gulf countries?
Well, there's importance across a range of different domains. I mean, on a diplomatic level, the Russian invasion of Ukraine and the negotiations have presented an opportunity for Gulf states to serve an important role as mediators on the world stage. And we've seen the Saudis and the Emiratis in particular doing precisely that. So I think, Gulf states see a role in kind of global mediation for themselves and raising their profile in global diplomatic sense through Russia. Of course, Russia is a major energy producer, part of OPEC plus, the Saudis and other producers in the region are thinking about the best way to move forward to keep the oil price environment in a favorable position for their finances, but also to unwind voluntary production cuts in such a way that keeps the market stable and in the interests of these governments and their finances. And Russia is going to be an important part of that. There's also investment there was a healthy click of investment before the invasion of Ukraine. A lot of those investments have been put on hold because of the risks associated with investing in Russian assets. But, Gulf states in the past have invested in Russian assets. And I think, in the future, if there's a resolution, there will be a kind of creeping back into those markets and looking at assets. But that's still a ways off. And I think on the last level that comes immediately to mind is that you have a lot of high net worth individuals from Russia, also from Ukraine in Gulf countries, in the UAE and others. These countries are hubs for global wealth, be it from China, India, Europe, and also from Russia and Ukraine. So you've got particular demographics of individuals who are very visible and prominent members of these countries. So all of those factors mean that I think when you add up all of those factors, these governments, they're hedging their bets. They're actively some of them are trying to be involved in negotiations, but they're also looking very carefully at dynamics between Trump and Putin and Zelensky, although we're not sure that he's going to be part of an upcoming meeting in Alaska. And I think they're also hedging their bets on the calculation that they are rising middle powers. And in a multipolar world, they need to maintain strong working relations with just about everyone. That is their attitude. And we could sit here and have a whole nother podcast picking apart, to what degree the world's multipolar, to what degree are these rising powers, and where's their where are their strengths and their weaknesses. But that's very much the worldview that emanates from a lot of these capitals. And I think if you keep that in mind, you understand, it's easier to understand the engagement, especially at this moment, between the Gulf and with officials in Russia.
Well, before we bring the podcast to a close, there's just two areas I wanted to ask you. The first is this idea of pegs that the Gulf countries, or bar Kuwait has a basket. With the way the dollar's going, it's not doing great since Donald Trump came to office. These Gulf countries, they spend a lot of money on maintaining their pegs. Their currencies are being on a peg. How much political capital do they have in order to come off this peg, do you think?
I see the likelihood is very low. And it's not so much about political capital, to my mind, that would accrued political capital that would enable coming off of these pegs, because I think that view is based on an assumption that these governments want to move in that direction, and I don't see evidence of that being the case at the moment. I think that what could motivate that in a distant future, which I want to clarify, I don't see right now, but I think a scenario in which moving away from the dollar peg could happen would be done in a purely economic sense, that if the economic conditions were to deteriorate and to worsen to such a degree that government officials saw it as beneficial to their longer term economic interest to do so, then that they would make that very difficult decision. Over the years of working here at the Institute, I've heard many eulogies for the dollar peg, and none of them have come to fruition. There are various steps, I think, along the way, and Kuwait is an example of a basket of currencies that is, I guess, a possible halfway point. But it just hasn't happened, and I don't see it happening anytime soon. There's just a range of different, I think, potential negative implications that at this moment many Gulf governments do not want to see. I mean, just one example, a lot of the assets under management in many of the portfolios of these sovereign wealth funds are in the U.S. market and different U.S. assets. So, I mean, taking steps that would further deteriorate the strength of the dollar and raise more concerns about U.S. assets and the U.S. economy, I think right now is much more detrimental to the long-term interests of these states. So I don't see it, but of course it's an important scenario that we have to keep in mind going forward. And I quite honestly was very, very surprised when BRICS summits were convening meetings that were largely organized around talking about de-dollarization. This was happening at the end of the Biden administration, and I think we're not going to see that same level of discourse coming out of BRICS summits, at least with the participation of your Indias and your Gulf countries. Although there's some tensions at the moment between India and the U.S. But that aside, I don't think that that's going to be as salient of a conversation point, and it's not going to fly as well and be tolerated to the same degree under this Trump administration. So I think there are a lot of headwinds to de-dollarization, and despite the fact that there are some indicators of concern about value of the dollar and the strength of the U.S. economy and some of its underlying, and the important assets in the U.S.
The other thing I wanted to talk about was Syria. Syria, we had a change with the end of the Assad family rule, which has been ruling Syria since 1970. It seems to me that the Gulf countries, some of them miscalculated the situation and now are trying to compete against each other to try and get influence in Syria. What's your take on how things are going at the moment?
I believe that the Gulf governments were broadly in line with the consensus view toward Damascus and the Assad regime right before the very quick downfall of the regime that quite honestly took most people by surprise. And so we could say there's a miscalculation there if we were to look at the Arab League and Gulf states kind of calling for a renormalization of ties with the Assad regime. But that was the consensus view, that this war had been going on for too long. It didn't necessarily have clear indicators for most people that it was going to end in the dramatic fashion that it did, or at least that the Assad regime was going to end in that fashion, and that something needed to change in terms of sanctions, in terms of re-engagement within the region that could actually make some improvement on the ground for Syrians. Obviously, once the political dynamics changed, that view did very much look like a miscalculation. It was a miscalculation and required a a change of course. I think that the Saudis and the Qataris have probably made the most gains thereafter in terms of adjusting to the new realities in Syria. The Saudis, of course, arranged the kind of diplomatic a number of different diplomatic negotiations that culminated in the meeting between the new leader of Syria, Ahmed al-Shara, and Donald Trump on his trip, and then led to the removing of sanctions. So I think Saudi Arabia has positioned itself very well to play an important regional role in Syria and has led some investment delegations thereafter to the country. We hear more and more reports each day about Qatari firms signing deals in Syria. These are all non-binding MOUs, so we've got to wait to see what actually materializes on the ground. But I think the Syrians have been engaged for a long time with now a number of the power brokers. The Qataris have been engaged for a long time with a number of the power brokers now in Syria, and I think are seeing some benefits to those linkages. The Emiratis have signed some deals, port deals, so they are going to be involved in this future Syria as well. But I think that my sense is they're a little bit behind in terms of the engagement. They're taking a more cautious approach toward the new government in Damascus and are waiting to see how things pan out.
And Robert, how do you see the next year going for the Gulf countries? Do you think they'll continue to just, in terms from an economics perspective, do you think they'll continue on the path they're on, or do you think there'll be any other shocks that might come their way?
Yeah, well, we have a upcoming visit that's been reported, not officially confirmed as far as I know, for Mohammed bin Salman to come to the White House in November. So it should be interesting to see what the Crown Prince making this visit, coming back to the U.S. and kind of reemerging on the world stage and arguably the most prominent place you can have an official state visit, what that will bring. And what signals we'll get from that visit in terms of the trajectory of Saudi-U.S. relations, but also how Saudi Arabia sees its kind of priorities going forward on the world stage. It will be a really important event to watch. Bringing things back to the kind of economic and financial enablers of these governments, prices right now are pretty stable for oil prices. We're seeing around $70 a barrel. That's not a crisis moment for these states, so I don't expect to see, major policy changes and reversals. Some of the countries like Saudi Arabia will have to conduct strategic reviews like we're seeing of certain projects and maybe reorder development priorities and extend some timelines. But I don't expect major changes on that front, unless, of course, we see a more significant dip in oil markets that later in the year or early next, we see this unwinding of voluntary cuts leading to a substantially oversupplied market. And the short-term forecasts that are already indicating kind of low 60s dollars per barrel, if those prove bullish, then we could see, an even more difficult financial situation for some of these states. And that may require a course correction, but by and large, I think right now it's going to be a steady economic course without major policy changes. And other than that, these governments, they're going to double down on their relations with the U.S. They've signed big deals in the tech space, and they're going to now want the receipts to back up those deals. They're going to want the, in writing, what kind of export controls they're going to, and regulations they're going to have to work with to ensure that they actually get the critical technology inputs and the chips that they need to advance their technology agendas. I think that will be front and center for these governments moving forward over the next few months.
Robert, tell us how many projects you're working on, any upcoming projects you may be working on.
Yeah, I'm continuing to work on a sovereign wealth fund. So I'm working on a book project that is trying to situate sovereign wealth funds within the broader foreign policy agendas of GCC states. I'm also working on another book project looking at Gulf Horn of Africa ties, which is another interesting space, looking at the Red Sea as a zone of collaboration and contestation between Middle Eastern countries and Horn of African countries. And I'll continue my work at the Institute looking at a range of different political economy issues. There's quite a lot to cover and not enough time.
And Robert, before I let you go, what's the best way to reach you? Are you active on social media?
I'm one of the holdouts on social media, I've got to say. The best way to reach me is via my email. You can find it on the Institute's website, on my Georgetown bio page. I am on LinkedIn, so you can reach out to me on LinkedIn as well, and encourage listeners to reach out with comments, suggestions, and excuse to have interesting chats. I've still waiting to be convinced of the benefits of social media engagement, and so far I've been able to do okay without spending too much time on social media.
Yeah, it probably sounds better for your mental health, to be honest. And okay, so I'll link everything in the show notes, your email, and also your book as well, which I think is a fantastic read. I'll link that in the show notes. But Robert, this has been a really fantastic conversation, really insightful as well. And hopefully we can do this again maybe in 6 months or a year's time. But
Let's do it.
no, thanks for coming on the platform, and really appreciate it.
My pleasure.